If your state tax profile is wrong, back taxes, penalties, interest, liens, and levies can hit your business without warning today. That damage can freeze accounts, delay payroll, block vendors, and strain your family when cash flow is already tight now. States flag you through data matching, residency audits, and nexus rules when your filings contradict where you live or sell here. State enforcement is independent, so federal compliance does not prevent a state from assessing tax, penalties, and interest clearly. Most states ingest W-2, 1099, K-1, marketplace, and shipping data, then match it against missing state returns automatically consistently. They also review registrations, property records, licenses, and public footprints to map where your business actually operates immediately. Remote work increased exposure because employees, contractors, and management decisions now happen across multiple states routinely often. Do you know which states see your income, shipments, and logins, and compare them against missing filings right now already? Residency versus domicile is the first friction point, because leaving physically can still leave you taxed as a resident again. Auditors test intent using home access, spouse location, schools, doctors, vehicles, clubs, and community ties within the state carefully. They also check driver's licenses, voter records, mailing addresses, and banking patterns to see whether your story aligns always. When facts conflict, the burden shifts to you, and weak documentation invites deeper audits and longer look-back periods today. Do your records show a clean exit timeline, or do they show convenience ties you never actually terminated fully now? You are watching Tax and Borders, and you will get context, rules, typical scenarios, prevention controls, and cleanup steps quickly. Business Nexus is the next friction point, because it determines whether a state can require registration, returns, and payments here. Sales tax economic nexus expanded after Wayfair, where state sales thresholds can trigger collection duties without offices quickly. If you ignore registration, liabilities stack quietly while you keep selling, and penalties and interest continue compounding clearly. Thresholds vary, so you must track customer location, taxable status, and cumulative sales by state every month consistently. Do you track thresholds proactively, or do you discover them after a demand letter includes years of estimates immediately? Income and franchise exposure is separate, because some states tax economic presence differently than sales tax standards often. Some jurisdictions impose minimum or franchise taxes regardless of profit, so missed filings become expensive over time today. Information returns like W-2 and 1099 trigger matching, so federal reporting can expose missing state returns quickly now. Procedural failures matter, because missed portals, late e-filing, and ignored notices create extra penalties and faster escalation here. Some taxes create responsible person liability, so owners may face personal exposure when payroll withholding controls fail quickly. Scenario 1. You moved abroad but kept a high-tax state license, mailing address, banking, and frequent visits clearly. The state argues domicile never changed, then requests travel logs, leases, utility bills, and phone records for years consistently. Scenario 2. Your e-commerce store crosses sales thresholds in several states, but you collect no sales tax anywhere immediately. Shipping data and marketplace reports trigger notices, then assessments arrive with penalties, interest, and registration demands often. Scenario 3. You hire contractors in new states or add fulfillment locations, creating nexus you never monitored today. Cleanup becomes expensive because you must register, backfile returns, and reconcile historical transactions under compressed deadlines now. Scenario 4, you travel for consulting, workdays occur in several states, and day counts create allocation risk here. You may owe returns where you never planned, because presence and business activity can both create taxable connections quickly. Do you want to learn these rules from a letter or from tracking your footprint before the state acts clearly? To prevent residency disputes, align addresses, licenses, voter records, and daily life facts with your claimed home state consistently. End old ties formally, update accounts everywhere, move valuables, and keep proof showing where you actually lived immediately. To prevent nexus surprises, track sales and fulfillment by state, and separate sales tax duties from income tax duties often. Standardize registrations and registered agent coverage so notices are received, logged, and answered on time today. Build a compliance calendar per state with registration, return, payment, and renewal dates clearly assigned to owners now. Keep an audit-ready folder with leases, travel logs, bank statements, payroll records, invoices, and shipping documents here. Clean bookkeeping matters because reconciliation delays create gaps, and gaps make your explanation slower and less credible quickly. Do you have one searchable archive or scattered screenshots that waste hours when an auditor asks questions clearly? Diagnose by mapping every state where you have customers, shipping, inventory, employees, contractors, property, or management consistently. Add personal factors, family residence, housing access, memberships, vehicles, medical providers, and time spent per state immediately. Classify exposure into residency, sales tax nexus, and income or franchise risk, because remedies differ by category often. Decide the right fix per state. Voluntary disclosure, backfiling, prospective compliance, or formal audit response today. If exposure spans many states, coordination matters because inconsistent narratives across filings can trigger more reviews now. Execute by registering where required, collecting sales tax properly, and setting filing workflows that prevent repeat omissions here. Update domicile evidence by changing licenses, registrations, and addresses, and documenting the sequence with dated confirmations quickly. Create monthly state sales reports and set alerts when you approach thresholds or add new fulfillment points clearly. Answer notices quickly with organized files because delay often converts questionnaires into audits and collections actions consistently. Retest exposure quarterly because growth, hiring, travel, and new marketplaces create obligations without new offices immediately. Service businesses must confirm sourcing rules because some states tax services where the work is performed often. Goods businesses must confirm destination sourcing because shipments, returns, and drop shipping can change taxability outcomes today. Payroll adds risk because wrong withholding can trigger collections faster than income tax disputes in some states now. Partnership and S-corporation income can trigger composite or withholding regimes that some states enforce aggressively here. When you change states, update business addresses, bank profiles, and licenses because mismatches trigger domicile questions quickly. Avoid casual mailing addresses in high-tax states because mail, statements, and packages become evidence of ongoing ties clearly. Avoid ignoring portal messages because electronic notices can start collections while you think nothing is happening consistently. Do not assume marketplace collection solves everything because income tax and registration obligations can still apply immediately. Do not assume sales tax nexus equals income tax nexus because standards, thresholds, and definitions vary by state often. Do not assume profit is required because minimum taxes, fees, and registrations can accrue every year today. Do not assume intent is decisive because states decide residency from objective facts and documented behavior now. If you are foreign-owned, separate federal informational filings from state tax work or cleanup costs can compound quickly here. Use consistent transaction descriptors because vague memos make matching harder and increase questions during state reviews clearly. Keep travel records current because day counts and work locations are common audit questions in residency cases consistently. Keep proof of housing changes because leases, closings, and move receipts help establish a defensible domicile timeline immediately. Set internal owners for state compliance because unassigned tasks cause missed filings and unnoticed portal letters often. If you receive a notice, respond calmly, attach documents, and confirm deadlines because silence increases enforcement pressure today. Keep exemption certificates organized because missing certificates can turn non-taxable sales into taxable assessments during sales tax audits now. Watch for local gross receipts taxes because some cities impose separate filings that surprise founders who only monitor states here. Understand apportionment rules because multi-state income can be divided by payroll, property, and sales factors differently quickly. Track where decisions are made because some states argue management location creates nexus even without employees there clearly. Maintain registered agent reliability because missed service of process and notices can default you into assessments and collections consistently. Use voluntary disclosure programs carefully because they can reduce look-back years but require accurate statements and timely filings immediately. Do not ignore unemployment and payroll tax registrations because states cross-match employer records and issue fast penalties often. Separate personal travel from business travel in logs because audits use calendars, tolls, and flights to test presence today. Before expanding, review marketplace facilitator rules because they change who collects sales tax and what returns you still owe now. Recap. Prove domicile, track days, monitor thresholds, separate tax types, calendar filings, answer notices, and keep evidence ready here. Subscribe, like, share, and comment which states you operate in, so future episodes address your cross-state risks quickly. This is educational information only, not legal or tax advice. State rules change and your facts require professionals clearly.